Hi everyone, I am Suhas Mohan, your tax mentor at BeingACCA, and in this video, we will be discussing the last question of Section C of the 2025 pre-December mock. So let's quickly start off with the question. You're a trainee chartered certified accountant. Your manager has asked you to review the draft corporation tax computation prepared by the finance director of Apex Limited for the year ended 31st March 2025. The finance director is new to the role and has made several errors. Okay. So there's already a computation that has been provided to us, but it is made with a lot of mistakes, is what the question is saying. So we'll see what the values are like. Apex Limited Corporation tax for the year ended 31st March 2025. The trading profit is at 174,864. The dividends received from a 30% shareholding in UK company. So 30% shareholding in a UK company means that the company is not an associated company. So it will be because Apex Limited is not having at least 50% of shareholding. So it will be considered as a non-associated company. All right, this is something that we'll have to remember. And next is the taxable profits at 177, 114, and the corporation tax is charged at 25%. As we can already see, identify a mistake here that the dividends have also been included in computing the taxable profits, and the corporation tax is calculated on this value, which is not the right value, because dividends are always exempted from corporation tax purposes. They are only used if they are from non-group companies or non-associated companies like this company. It will be used in the computation of augmented profits, but that is it. They will not be used in calculating the corporation tax. All right. Now let's move on to the next part of the workings that are provided. The trading profit is calculated as follows. One is operating profit is 137,000. The depreciation is 20,000. Donation to national charities 1,000. The professional fees, general accountancy has also been added back. So here we can see these are the operating profit, and these values have been added back in order to compute the trading profit that is used over here. But in this, we'll have to identify the mistakes that are there and have to correct it. So depreciation has been correctly added back because it is a non-cash expense, so it should be added back. Donation to national charity is also added back correctly because it should be deducted from the total profits in order to get the taxable total profit. So this is also correct. Next, professional fees of general accountancy. Professional fees of general accountancy is an allowable expenditure because it is directly relating to the accounting part of it. So this is an allowable expenditure. So this should be at zero. All right. Next, legal fees, acquisition of a new 6-year lease. Again, new year lease of 6-year lease is also correctly added back because it is a capital expenditure. It is capital expenditure in nature and should be added back correctly. So this is correct. Next, entertainment of suppliers has been added back. So this is also right because entertainment of suppliers is a disallowed expenditure. Client entertainment of overseas clients is also a disallowed expenditure and has been correctly added back. And next we have staff Christmas party of 180 per head for 10 staff. Staff entertainment is always an allowable expenditure and it should be at zero. So this has been correctly added back because it was considered as a disallowed expenditure, which is not right. So this is also wrongly added back. After all these, we can see the capital allowances to be at 5064, and we can see that it is also being added back, but it should be subtracted. So this is also, there's a mistake in this as well. So let's highlight this value in red. Okay, let's highlight this value. Next. In addition to the legal fees, a premium of 24,000 was paid for the acquisition of a 6-year lease on an office building that was used for trade from 1st January 2025. The lease premium has not been included in the operating figure or the calculation of trading profit above. So there is a lease premium that was paid, which means an allowable deduction on the lease premium on an annual basis will be allowable, which has not been included. So this note is also something that we should be considering. This yellow. Next, you have the capital allowances calculation. Capital allowances says the main pool brought forward value is at 15,300. There's a private use car which is included. Always remember, for corporation tax purposes, private usage is not even taken into consideration. It was only for income from self-employment. So for that reason, this is completely wrong, having a private use part of it. And there's a special rate pool separately included. All right. So these are the ones that we have seen so far. Next, coming to the additions part of it, there is a new office building. There's new office building integral features which was taken directly to the special rate pool. And there's a note relating to it, which says the new office building integrated features were acquired and brought into use on 1st July 2024, which means this is a new integral features that are being included, but they have been wrongly included in the special rate pool instead of taking the AIA into consideration, which is again a mistake because AIA is completely available on this as it is a new one and on which AIA will be available. So that should be taken to AIA. Next is a new car for finance director, which has note 2. The car has CO2 emissions of 55 grams per kilometer. It was purchased for use by the finance director, and 20% of the mileage is for private journeys. So here we can see this car has a 50, CO2 emissions of 55 grams per kilometer, which means it should be forming a part of the special rate pool, but it was included as a private use car, and the WDA has been taken at 18%, which is not right, but it should be taken as a part of the special rate pool. So this is also, there's a mistake in the calculation of this as well. So considering all these values, now we'll have to prepare a revised corporation tax computation for Apex Limited for the year ended 31st March 2025. You should indicate by the use of zero on any items in the computation of trading profit for which no adjustment is required. Okay. The question clearly asks us to prepare a revised corporation tax. So let's start off by solving that. Revised corporation tax for Apex Limited for the year ended 31st March 2025. All right, this is how we'll start off our question. So when we start off our question, it should be in a similar format. First, it would be trading profit, which will be shown as a part of working one. So trading profit has been showing as shown as working one. So here we'll show it parallelly over here in the working one. We will show computation of trading profit. First, what do we take? We should start our value from here because operating profit should be started from here, which will be operating profit will be at 137,000. Going on to the next one would be depreciation. Depreciation should be added back, which is correctly added back at 20,000. So whatever has been given here, we'll have to redo it entirely in order to get the values that are applicable for tax computation purposes. Alright, depreciation is done. Next, donation to national charity. Donation to national charity. So donation to national charity is also a qualifying charitable donation and hence has to be added back to the trading profit. So that is something we'll add back to 1,000. Next is the professional fees. Accounting fees is something that we can write this as accounting fees. Accounting fees is an allowable expenditure because it is directly related to the business purposes. So for that reason, this is an allowable expenditure and hence should be marked at 0. Next is the legal fees. Again, legal fees is a capital expenditure in nature, so this should be added back. It is a disallowed acquisition of lease. Acquisition of lease. So because of that, this should also be added back. But earlier we have seen that there is a note relating to it, which says that in addition to legal fees, a premium of 24,000 was paid. So because of that, you will be getting a deduction on the lease premium paid. So, so for that reason, we will be deducting that by calculating less lease premium deduction deductible. Okay, which will show it as a separate working. Working 2. Over here, if we show it as a working 2, it would be lease premium deductible computation. So writing this way, first we'll have lease premium paid. The first is the lease premium that is paid would be 24,000. From that, we can deduct the lease premium allowable, which can be calculated by using the formula that is provided to us over here. If it is not provided as well, the formula would be lease premium deductible would be as deductible would be is equal to the lease premium into, we can directly show it here, is equal to 24,000 into 2% into the number of years minus 1. Number of years of the lease is 6 years, so 6 minus 1 would be 5. Into 5 would be the calculation, which should give us 2400. So the lease premium deductible is 2400, giving us the lease premium value taxable would be at is equal to this minus this amount, giving us 21,600. Now the deduction that we take would be deduction that is allowable expenditure would be multiplied by 21,600 divided by number of years of the lease, 6,600 divided by 6, and this will give us per annum deductible cost. But here we can see that the lease was actually taken on 1st January 2025, while our year ended is only 31st March 2025. So for that reason, this should be prorated for only 3 months, that is from 1st Jan 2025 to 31st March 2025. So this should be prorated by 3 months, giving it a value of 900, which is what we'll be taking here is equal to minus this value over here, giving us a lease premium deductible of minus 900. All right, now we have considered this. Now coming to entertainment of suppliers. Supplier entertainment. Supplier entertainment is again a cost that should be added back because it is disallowed expenditure. It should be added back. Supplier entertainment should be added back. And next we have client entertainment. Again, client entertainment is also a disallowed expenditure and has to be added back to 2,500. Next, we have staff Christmas party of 180 per head. Staff Christmas party, or we can write it as staff entertainment. And always remember, staff entertainment is an allowable expenditure. So for that reason, this is wrongly taken as 1,800 being added back, but it should in fact be allowable expenditure. So it should be marked at 0. Always remember, guys, marking allowable expenses to be zeros is very important because you will be getting marks for those values. Otherwise, you will lose out on 1 mark, one half mark for this and half mark for this value. All right, so this is very important. Now, from this, we will be deducting our last element, that is a capital allowances. Hence, we will show it as a separate working, like they have also done that. We'll be showing this as a working number 3. All right, working 3 would be our capital allowances. So in capital allowances, always remember you should show it into 3 parts. One is your first would be your AIA, next would be your main pool, then you'll have your special rate pool, and finally you will be showing your allowances in total. All right, this is how you should always present your capital allowances questions. So first part of it, we will see the first part of it is balance is brought down. So balance brought forward. There is a main pool balance that has been brought forward of 15,300. Correct. Let's take this value here. 15,300 should be taken here. Next, we have new office building integral features, which has been wrongly taken into special rate pool, but it qualifies for annual investment allowance. So we should write additions qualifying for AIA, and we should write integral features and they are qualifying for AIA, so they should be taken here 17,500, and we should deduct less AIA of minus 17,500, and this 17,500 is annual investment allowance. So how much our amount is being deducted here should also be taken into the allowances column to compute the total allowance that is available. So 17,500 has been calculated. Next, we have a car that has been purchased, but cars, because the car is not a zero CO2 emission car, and it is in fact a car with CO2 emissions of 55 grams per kilometer, it will be forming part of the special rate pool because the CO2 emissions exceed 50 grams per kilometer. The CO2 emissions are within the 50 gram threshold, they will be a part of main pool, but since this is 55 grams, it will be in the special rate pool. So additions not qualifying for AIA. So this one would have car with 55 grams per kilometer. So it'll be forming part of the special rate pool at a cost of 35,000. Let me make it clear to you guys again. Private use adjustments are not applicable for corporation tax. It is only for individuals where you'll be having the private use adjustments. All right. With this, I think we have taken all the assets that are provided to us. So here we can take the total, we can start totaling the values. Is equal to 15,300. Special rate pool also has nothing but the car, so this will be this one. So from this, we will deduct written down allowance at 18% for special rate pool, for main pool would be at 18%, so is equal to minus into 18% would be 2754, and how much our allowance that we take in this one should be also added to the allowances column is equal to minus this one. All right, next at the rate 6% for special rate pool, which would be at is equal to this into 6%, giving us a total of 2100, which should be taken into the allowances column. And to taking that total from this, now we should include balance carried forward. It should only be for main pool and special rate pool. So it would be equal to sum total of the net of the total value of the special rate pool and the written down allowance deduction. So giving us a total allowances of would be the sum total of this column, where you sum total all the allowances that have been calculated so far. One is AIA that was available. Next is your main pool, your written down allowance on main pool. Next is your written down allowance on your special rate pool, giving it a total of 22,354. So less capital allowances working 3 is equal to minus this value over here would be giving you your capital allowances. From this, after this, we have completed all the calculations. So now this will give us our trading profits is equal to sum of all of these would now give our appropriate answer to be 141,746, which is exactly what we will be taking over here is equal to 141,746. Now, in the question, if you see, they have done is they have taken the dividend received from the 30% shareholding company and calculated the taxable profits. But is that how we do it? If there are no other incomes, then trading profit is the total income from which we should deduct the qualifying charitable donations to get our taxable total profits. But which is wrongly included as a part of the donation to national charity, we should be deducting from operating profit, we should be deducting that from the total profits. So less donations to national charity. So that should be deducted here to be minus 1,000, giving the taxable total profits to be a sum total of these both. So now the taxable total profits are at 147.46. But as I've already told you earlier, there is a dividend received from a non-associated company which will affect our augmented profits. So here initially before that what we should see is the taxable total profit is falling between the threshold of upper limit and the lower limit, because the lower limit is at See, the lower limit of the company is at 50,000, and the upper limit is 250,000. But Apex Limited's taxable total profits are lying between the threshold of 50,000 and 250,000. So for that reason, this Apex Limited is eligible for a marginal relief. And in order to compute the marginal relief, you will be given with the formula over here, and for which you need the augmented profit computation. So for that reason, we will be taking the augmented profits as well. So for augmented profits is nothing but sum total of your taxable total profits plus dividends from your non-associated companies. So here you add dividends from non-associated companies, giving that a total of, if you add the dividends from non-associated companies, you will be getting 2250 here. 2250, making the augmented profits to be at equal to sum of the taxable total profits plus the dividends, making it a total of 142,996. Now, what did they ask us for? They asked us to calculate a revised corporation tax computation. So always when the profits are lying between the threshold of 50th upper limit and the lower limit and the upper limit, the corporation tax is always charged on the taxable total profits at upper limit. From that, we deduct the marginal tax relief that is available. So for that reason, corporation tax at 25% is what we will be taking. As we have seen, the main rate is 25%. So that's what we'll be taking. And always remember, corporation tax is to be charged on the taxable total profits and not on the augmented profits. It is a very important point to remember. And if you miss out on this point, your answer would be coming down to a wrong one. So now we'll take the taxable total profits to be 147.46, onto which a 25% corporation tax is to be calculated, giving us a total of 35,187. From this, we deduct less marginal relief. How do we calculate marginal relief? The entire formula will be given to you for marginal relief. You really don't have to remember anything in that. You just have to understand the concept that marginal relief is calculated when the taxable total profits lie within the threshold between the 50th upper limit and the lower limit. So here we can see the threshold marginal relief is upper limit minus augmented profit. So here if we calculate it, it would be, what is the upper limit? Upper limit is 250,000, because there are no other associated companies, as per limit will not be affected. So upper limit will be at 250,000 minus the augmented profits. This is our augmented profits, correct? Into the standard fraction. Standard fraction is also given to you guys. We'll be taking the 2024 one because this is what is relevant to us, into 3 by 200 into, this is done. Now we'll be taking the taxable total profits. What is the taxable total profits? This is the taxable total profits divided by the augmented profits. This value will give us a marginal relief of 1579. All right. So making that total corporation tax would be corporation tax payable to is equal to this minus this, making the total corporation tax payable to be at 33,607. And that is how you should calculate it. And you will be getting your 12 marks from this question. All right. This is how the computation will be. And with this, we can move on to the second part of the question and the final part of the pre-December 2025 mock. All right. So if you guys have not watched the other videos of section A, B, and the first two questions of section C, you can always watch them out in the playlist of the December 2025 pre-June mock. All right. With this, we'll move on to the final question. Advise the finance director of the following. The due date for submission of Apex Limited's corporation tax return for the year ended 31st March 2025. So they are asking for the due date for submission of corporation tax. So corporation tax, if it is being filed by the self-assessment method, the corporation tax, the date of submission is always 1 year following the date of period of account. Always remember this. It is 1 year following the date of period of account. Since it is 31st March 2025, it should be made by within 1 year. It should be submitted within 1 year, which is 31st March 2026 is the right answer for this. All right. Next is the deadline for Apex Limited to amend this corporation tax return after filing. So always the deadline to amend the corporation tax that has been submitted would be 1 year from the date of submission. So considering the date of submission to be 31st March 2026, the amendment deadline would be 1 year from it or 12 months from it, which would make it to 31st March 2027. All right. Next is the deadline for HMRC to give a notice of compliance check into this return, assuming the return is not submitted late. If the return is not submitted late, then the HMRC can give notice of a compliance check within 12 months of filing that of delivering the return to HMRC. Always remember, it should always be made within 12 months of filing the return or submitting the return to HMRC. All right, these are the 3 points that we'll be writing here, and you'll be getting your 3 marks. Guys, we are actually coming to the last 10 days of our preparation days. So it is important for you all to understand and remember that the tax assessments, like the deadlines, the dates of filing, and any amendments or the penalties that are applicable, all these it are at least will be giving you at least a score of 8 to 10 marks, because these questions will be tested in section A, section B, and to the minute extent, like we have seen in this question for 3 marks, it will be tested, making it up to a total of 8 to 10 marks at least in the final examination. So it is important that you pay attention and practice these at a major level, at least in the last 10 days, so that you'll be able to remember the dates, the penalties, and all of these in a better manner. All right. Now let's answer this question. The due date for submission, so you can directly copy from here. 25 would be 12 months from the date of the end of period of account. 12 months from the date of the end of period of account. So for Apex Limited, it would be 31st March 2026. Okay, with this, writing this one line will be giving you a 1 mark directly. All right. Next would be, we can directly remove this and we can write y over here. For the second one, it's asking us for deadline for Apex Limited to amend this corporation tax return after filing would always be 1 year after the due date of submission. Again, copy it from here. Be 12 months from the date of from the date of submitting the tax return to HMRC. So the deadline for Apex Limited to modify its to amend its corporation tax would be at amend its corporation tax would be 31st March 2027. All right, with this, you have completed your second part of the question, scoring another 1 mark. Now, moving on to the third part of it, compliance check is nothing but HMRC is trying to verify or I try to identify if you have actually filed the correct returns or not. So, for that, HMRC would try to investigate that. And this investigation, if assuming that the return is not submitted late, the investigation would always be done within 12 months from the delivery date of filing. Always remember that it should always be done within 12 months of the delivery date of filing. Would be within 12 months from the delivery date of tax returns to HMRC. All right, writing these 3 points will be giving you your 3 marks. And with this, we will come to an end of our question. And so that if your guys are having any doubts, I would always want you guys to ping your doubts in the comments so that I could reach out to you or respond back to you within a day at maximum. And also, my contact details will be provided in the description below, so you can always reach out to me for any doubts or queries. All right, guys, all the very best for your preparation. And feel free to reach out to me for any doubts once again, and have a very good preparation time. Bye bye.